Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra, with me Shell Bhatnagar, and this is Market Today, a show where we'll help you understand the closing action on the D Street. Well, it looks better than what we were seeing in the early part of the day. Flattish trade right now on the Nifty 24,462, but it's been very, very volatile. We did had times of complete green tick and positive zones. Small caps and mid caps have also jumped higher, now recovered from the day's low completely. Look at 1.5% uptick can be seen on small caps. That's something that has improved the sentiment for the overall D Street. Mid caps are now up nearly 1% higher in trade, but it's the IT space that's definitely hogging all the limelight right now. The index itself is up by 2.5% right now, and a whole host of top movers which are contributing to these gains. Tech Mahindra and top spot within the top Nifty gain, as you can see, a 2.5% uptick right there. But Coforge is something that we can't take our eyes off. 11.5% higher after those earnings came in. Even in the weak setup in the first hour, it continued to pull up higher, and towards the latter half, now it's inching higher by 12%. Persistent Systems, the other stellar earnings that came in, 11% higher for this one as well. Emphasis about 5% up. LTTS 4% higher. LTI Mindtree also 1.5% up. The entire space seems to be in the thick of action right now. What else is buzzing on the Nifty? It's the Bajaj twins. We have Bajaj Finance that's up 5.5% as the top mover on the Nifty. Bajaj Finserv up 1.8%. Bajaj Auto also inching higher now, 2.5% higher, and that's how the sentiment has played out up until thus far. Good afternoon, Shell.
Good afternoon, ladies and gentlemen. It's earnings, earnings and earnings. If you for a moment avoid looking at the Nifty and the Bank Nifty on the weekly expiry day of the Bank Nifty as also T-1 for Nifty, you would imagine that all is well on the world of the Lal Street, and it's the second quarter April. It's the second quarter July-September earnings that have done fantastically well. Look at Zomato. Come festive season, and Sakshi tells me that they've raised the platform fee by 60% to 10 rupees per order, ladies and gentlemen. What was at 242 in the morning is now at 263, up 2.7%. Earnings were fabulous. Profit after tax for the second quarter rose, hold your breath, 400%. And it's no surprise that the counter is the top traded with 3,700 crores worth of transactions that have happened on the NSE, and well on its way to reclaim former glory. Again, a very strong set of numbers coming in by Persistent, about 5.3 and 5.8 percentage point rise in sales and top line for the second quarter sequentially over Q1, and a very, very strong reward from the market. Ditto Bajaj Finance, a 13% rise in second quarter net profit and a 5.5% uptick. And of course, who can forget the sterling show by Amber Enterprises. Numbers, numbers and numbers. Now this is the good news that we have. The bad news, ladies and gentlemen, is that no matter how hard the Nifty tries to climb back above 24,500, it's the call writers that are incessantly putting pressure and bringing the index lower. So it's like Trishanku, ऊपर जाने नहीं दे रहे और नीचे वो आना नहीं चाहता. So with that, ladies and gentlemen, let's say hello to our guest, Mr. Sumit Poddar. Mr. Poddar is joining us from Tikona Capital Advisors, where he is the founder and the CIO. Namaste, Sumit ji. Good afternoon to you, and festive greetings ahead of Diwali. How are you analyzing the sentiment on the Lal Street? What looks good and what looks super bad?
Yeah, thanks a lot, Shailendra ji and Sakshi. Thanks a lot for inviting me on this show. And of course, the standard disclosure apply, being SEBI registered RAs as such. So now coming to your question, yes, interesting times, primarily because if we look at 2024, we all have been kind of waiting for a bit of a correction, saying that, oh, ab to ho gaya karke, and things like that. Possibly the period has started, and we are in that kind of a correction situation. All the things that happened during the year, rather it be kind of a soft landing or inflation turning out to be a rate cut situation for all of us, for that matter, or geopolitical situations, as well as even IPOs or SME IPOs, which we have kind of seen through the year. So Diwali se Diwali tak agar dekhein to those are 2024 has been quite exciting so far, and of course, the things that were being expected in September are happening in October with FII's money kind of going out. Interestingly, yes, the results are coming out on a mixed venture as such, because some of the sectors were expected to be soft, like for example, banking were expected to be soft. Even the festive season, as far as autos, didn't start on much fanfare as was expected, and even rural spending was soft. Having said that, the data that was coming out was quite strong as far as economy is concerned, and maybe quite recently it has been maybe a cyclical correction that was needed is happening. Having said that, yes, if we look at structure at which we are sitting in terms of fundamentally, that continues to be on a healthy footing. Uh, but these corrections are a healthy reminder of the situation that is happening, because I guess everybody is taking it for granted that market to chalte hi rahega, amrit kaal hai, earnings aao nahi aao, re-rating hote rahega, or things like that. And for that matter, this is a healthy reminder to market participants, healthy reminder to regulators, healthy reminders to even the corporates, because corporates have raised money left, right, and center. They are encashing, they are raising money. So it's a good reminder. Having said that, yes, we what we currently are looking for is things which were kind of
Right.
already in a negative situation and now coming out of a soft patch, and primarily
Absolutely.
because yeah, yeah. So I mean
Mr.
sectors like
Poddar,
I
also wanted
yeah,
to interrupt you just to understand from
sure.
you. In case in this recent dip of last 3 weeks, have you added any fresh stocks? Have you, taken positions or advantage of the volatility and bottom fished anywhere?
So a very interesting question, Sakshi. I mean, given what we believe in story of India, definitely we keep on evaluating stocks and sectors where we find a bit of a value and price gap. Having said that, it's a continuous effort to identify new ideas, new stocks, or new sectors. While this correction definitely provides uh, an opportunity to add. Having said that, recently what we have added is something like a Tube Investment, which is a holding company of CG Power, as well as it holds stake in Shanti Gas. So it benefits as far as the industrial uh, um, you know, growth that is taking place in the country, as well as the kind of new age investments or new age and manufacturing investments that they are doing. Of course, 3D Power is doing investments in semiconductors and things like that, whereas Tube Investments is doing investments on the E three-wheeler side as well as E two-wheeler side. And they aspire to be top two players. I mean, I think that is good enough a reason to have exposure to such company. While they may not have corrected during last 3 weeks, but over last 6 months, given the kind of investments they are doing in the new areas, and the group or the promoter is well known
Hmm.
to back the ideas that are
Right.
for decades and centuries, right? So this is what we have kind of added uh, per se, and we continue to kind of be positive, or maybe a bit of a overweight on things like IT. We have already seen during this result there is no incremental negativity as far as IT is concerned, and within IT, of course, a combination of large cap and mid cap. Uh, which is what we believe can really do wonders to portfolio.
Okay. Sumit ji, so you've added Tube Investments at 4,000, 4,500 rupee levels. Any places within your recommended portfolio, or how should I say, uh, spaces where you have coverage, have you booked profit?
So, I mean, of course, we raised a bit of a cash, but that was a while ago, not necessarily just at the start of this correction. We continue to hold our maybe bets as far as a bit of BFSI, as far as a bit of specialty chemicals is concerned, a bit of even auto ancillaries like batteries or space continues to do well. And we are definitely uh, I mean we are betting on the same ideas rather than really switching a lot, unless as we shared ideas like tube investments, which is where we see a healthy upside given the current environment.
Okay, got it. Mr. Poddar, let us understand from here on. You did talk about how from previous Diwali till now things have been very good. Now that we are starting off this Diwali on a slightly, weaker note or a softer note that what have we been used to in this entire year, what is it
Mhm.
that you can share as outlook on the markets till next Diwali? Where do you think the outperformance will come in from now in terms of sectors? If one has to build a portfolio till next 1 year, where should one be building up positions in?
So let's just kind of step back and maybe see what are the next things that are likely to happen in the next 12 months. While maybe past 12 months or maybe 12 months and more, what we were grappling with was inflation, high interest rates, geopolitical situation, and to some extent elections and what would happen as far as elections is concerned. Now let's kind of look 12 months down the line. There would be rate cuts. The interest rates would likely to be much lower. We are already rather, I mean, I'm sure we all are seeing that despite expectations of rate cut in US, the rates are rather going up versus an expectation of a rate cut. That is primarily because the US economy is doing well. So they are actually in a catch-22 situation where, of course, growth is coming back. They need lower interest rate, but at the same time, the debt burden is kind of going up. But the typical good situation that is happening for India is the despite US rates going up, Indian 10 years have not really gone up to in tandem to the same. So the spread between US yield and Indian 10-year yield is literally one of the lowest since 2003 2006 period. So if next 12 months are likely to be a very tight liquidity situation, I believe that India would be in best situation where such liquidity heat will not be felt, right? So that is one trend. Second trend, as far as the near term is concerned, yes, given SIP domestic money that is there, all of it will get deployed, and once that kind of gets deployed in IPOs or large FPOs that are taking place, we could see stabilization, and this correction is largely because of FII outflows. Uh, we could rather see FIS coming back once 2024 and fresh allocations literally start taking place. Third thing is benefit of technology adoption across the world. I mean, why we are seeing US really doing well despite having debt issues, despite having maybe increased unemployment as compared to past, is because of the technology investments that took place in the country. Maybe I mean they have been at the forefront of investment of technology. So next 12 months is what we are going to see. Now,
Yeah.
coming to what is likely to benefit as far as the sectors are concerned. Yes, new age companies like, I mean, this is not a recommendation, but I'm just giving an example of companies like Zomato, PV FinTech, or Car Trade. All these companies which are kind of riding at the forefront of technology would benefit. One trend
Right.
is that. Second trend, of course,
Sumit,
within sectors, we could see, sorry, just to complete this point, within
yeah.
sectors, there could be differentiator like in banks, ICICI Bank, and kind of banks which are at the forefront of adoption. And lastly, but not least, as a defensive play, IT services is something that can do well. Yeah, sorry, Shailendraji.
No, no, not at all. I was wondering what would be your top pick in the banking space, sir, at this point
So
of time?
banking space on the large cap side, what we actually like is ICICI Bank on a large cap side, given that they are at the forefront of technologization. On the mid cap or maybe a small cap, mass financials is something which we like, which have been a compounder as far as their asset book is concerned. Both the companies are part of our small case portfolios as well as client portfolios, and we definitely, I mean, as a disclosure, we have exposure to both the things, and these are the two which we would bag on to.
Okay. Mass Financial Services, the one which is at 291 rupees.
Right, right.
Okay, okay, okay. What looks good in mass financials for you? Because
So
for the last maybe since October 2019, the stock hasn't done anything at all.
So if we look at, I mean, maybe we need to look at the numbers, and possibly that would give a better feel of what the company is doing. They have been kind of compounding at 20% plus kind of a book. Of course, the near-term issues are what is keeping the asset quality in pressure. Having said that, they have over the cycle been able to manage asset quality quite well as such, and they have raised money recently, which is what is going to help them uh, kind of ponder any kind of cyclical headwinds, if at all, that they may see as such. And I mean, we definitely like the promoters, the way they think. They think in terms of blocks of decades rather than maybe a near-term quarter or so.
Okay.
एक्चुअली सुमित जी NBFC स्पेस में कोई भी स्टॉक काम नहीं कर रहा. बजाज फाइनेंस तो चल नहीं रहा पिछले 2 साल से. मास फाइनेंशियल क्या चलेगा आपका?
I mean, to both of us, maybe time will tell rather than really debating on this, because they are, see, stock price anyway is a slave of earnings and the way promoters do the business, right? NBFC, as you rightly said, NBFC banks, I'm sure आपकी मेरी किसी की भी recording उठा के देख लो, last 3 साल से every market guru is talking about banking and NBFC being underperforming and things like that. Is it that the business is gone? The answer is no. It will continue to be there. Yes, there were excesses, not just in any specific stock, but on an overall sector perspective. Also, FII's holding were quite high as far as this sector is concerned. So I think market is also learning. We are kind of transitioning not just from BFSI, which is one of the largest exposure as far as our economy, as far as our index is concerned, and that transition is literally taking place, and which is what is being seen as far as underperformance in financials is concerned. I take your point, but having said that, I think we like, or maybe earnings is what we are kind of bagging on, and which is what will lead to re-rating. Maybe you would be right 12 months down the line, or maybe the stock performs, and which is where our clients would be right.
Okay, got it. I think some more earnings coming in. Let's read out some earnings right there. Heritage Foods, remember viewers, this was one of the most talked about stocks when the elections were playing out. And this is Chandrababu Naidu family promoted company. It's reported its numbers. For Q2, consolidated profit has gone up from 22 crores to 49 crores, and this is on a year-on-year basis that we have seen for the company. And of course, apart from this, the revenues have also seen an improvement. When we talk about 978 crore rupees was reported last year same quarter, this time it's gone up to 1020 odd crores, even though the stock is still down in trade. There has been an improvement at least both top line and bottom line. We will be waiting for some more numbers. Yes, EBITDA has come in, improved operationally to 47 crores to about 83 odd crore rupees now. So those are some of the key parameters that we could read out right now from the flashes. Mr. Poddar, have you tracked Heritage Foods when it was right up there on everybody's radar and everybody wanted to own the stock in their portfolio? And how are you looking at it just 3 months down the line?
I haven't looked at this stock closely, but yes, I mean, on a broader perspective, yes, I mean, these unorganized to organized play are literally playing or maybe doing quite well as far as the numbers and profit growth is concerned. And the re-rating as far as movement within the FMCG space is what really helping them. And as you shared, if the numbers are really good, that would further add to how things are literally happening at this
Right.
company.
Mr. Poddar, what are the other stocks in your small case portfolio apart from ICICI Bank and Mass Financial?
So on the FMCG side, if the discussion is about FMCG, maybe again a snacking company, Bikaji is what we have been holding since last. I mean, we added during last 6 to 8 months. Bikaji is something that we were extremely positive, given the fact that it is more kind of a formalization of what this country eats, what this country likes, unlike a kind of a westernization of food. So yes, to a large extent, Bikaji is a beneficiary of such a trend where again because of their distribution expansion as well as their manufacturing expansion, they are likely to give a healthy growth going forward, which is what is also leading to the kind of growth and re-rating that is taking place. Apart from that, as I shared earlier, auto ancillary, what we like
Tube
or rather we
investments.
hold in our portfolios is Amra Raja batteries.
Okay.
Batteries is another space which is literally going through a fantastic transition on the decarbonization side. So players like Amra Raja are likely to be beneficiary of such a trend. They have also made investment in partnership with global MNC, whereby they would participate in this effort. Uh, Apart from that, yes, we hold Mastech as well as FL in our uh, small case portfolio, which has further given healthy returns for the period that we are holding.
Okay. So,
Mastech is another relating story that can really play well even going forward.
let me just recap. Tube investments and Amara Raja batteries from the auto ancillary space,
Mhm.
ICICI Bank and Mass Financial from, let's just say, the financial services space,
Right.
then Mastech, Affle, and Bikaji Foods. So these are the 7 that I remember offhand. What is
Wow. I
this?
mean, you have literally kind of summarized my portfolio. Of course, there are some few more, but yeah, these are the top of ones. I mean, which we like, which have performed well, and which are expected to perform well given the fundamental tailwinds that are in favor of these companies.
Okay. What are the other few more that you haven't named so far? We have
I mean,
7
these are
from you.
well-known large caps. Well-known large caps. I mean, as a combination of State Bank of India or HCL Tech and these kind of companies as such.
Okay. And what has been the CAGR return of your small cap portfolio over the last 2
So,
years?
last 2 years we have been kind of compounding at about 30% plus CAGR as such.
Okay,
So
got it.
last and on an absolute basis we are up by about 70% plus.
Okay. Got it. Mr. Poddar, would you highlight for us if new age internet companies are on your top list as well? Stocks like Zomato, Paytm, PB Fintech. How have you assessed some of these in the recent 6 months to 8 months odd? Have you added any?
So, I mean, of course, we keep on evaluating stocks as such, and Zomato is something which we had evaluated per se, and a few specific clients had an exposure to that as such. But in our portfolio, majorly we have Apple, which is a beneficiary of the overall digital advertisement space, and that had underperformed in the last 3 years, and uh, when we added, possibly we saw that it has run out as far as the underperformance is concerned, and a good outperformance since our exposure is there as such. And yes, as I discussed, next 12 months are likely to be for the companies of new age, primarily because of a kind of a realization where these companies have started realizing, yes, we have to be much more profitable. The whole idea of capital provider is not just month on month top line growth. It is all about return on capital employed. Of course, first they are looking at attaining profitability, and then that capital efficiency factor would come into picture. So yes, all these companies are expected to kind of do well in the upcoming 12 to maybe more than that as such. And it's not just these three companies. There could be many more which maybe come up, like Swiggy is getting listed. Who knows, with the funding that they get, they are much more aggressive and they get their strategy right to overtake Zomato over a period of time. So yes, these are the companies which are likely to do well. Having said that, these are not recommendations because we have to at identify each of the companies at a specific point in time. So yes, I mean, I would rather say that these are the companies which would be the driver of the markets for the maybe. I mean, I mean, the trend has changed from maybe old banks and old NBFCs, old cement companies or things like that. Things are literally changing to these new age companies, and within each of the sectors, the companies which are adopting technology, adopting new kind of ways of doing things, or aligned to renewable energy, or maybe the EV stuff that is literally happening.
Okay. Sumitji, what are your views on the cement sector? A lot of acquisitions are taking place. Just yesterday, Orient Cement got a new buyer, and before that, Pennar Cement was purchased. Lots of action in the mid-cap cement space. In terms of valuations, what do you think are the top 2 or 3 mid-cap target stocks in the cement space which can be looked at?
So, Shailedraji, let me just, I mean, I'll just share my views as far as the sector is concerned. Having said that, I mean, of course, it being a commodity sector, generally we are away from commodity sectors. We want to be more on companies that are compounders and that are having a good ROC, and there are which are less cyclical. But having said that, we do have a view on this particular sector, or maybe from a fundamental perspective, what is happening is I think the consolidation, any commodity sector ultimately has to go through consolidation in terms of if there has to be a pricing power, there has to be consolidation, which is what is literally we are going through since last 12 months. This acquisition definitely is a good acquisition in terms of the consolidation that is taking place. In terms of the cement demand, yes, that is relatively a bit weak as compared to what was the expectation. Once maybe the infrastructure spends, government spends come back, or maybe normalize back to the levels that were there 12 to 18 months back, we could see volume growth in such companies. Until then, yes, there is this kind of consolidation that is literally taking place. We don't have any recommendations in this particular sector, but yes, what is happening is good for the sector in terms of pricing, volume growth, as well as ultimately to the valuation.
अच्छा, एक
I
बात
hope
बताइए.
Shailendra, I am.
अरे ऑफ कोर्स सर, दिस इज अ मास्टर क्लास दैट्स गोइंग ऑन. अब आप ये बताइए कि
जी.
हाउ कम देर इज नो फार्मा स्टॉक इन योर स्मॉल केस पोर्टफोलियो? ये बिग केस के लिए तो नहीं है फार्मा स्टॉक?
Sir, I mean, ultimately, I mean, for an investor, money is an input and output. Ultimately, what we all are playing is a game, or a probabilistic game where we invest money and get a good outcome of it. While diversification needs to be there, but diversification to an extent where every sector forms part of our portfolio, we would relatively try to avoid such a situation.
Okay.
Yes, given the current scenario, there could be specific pharma opportunities that might come up. More than pharma, we have an exposure to chemical stock. or we had an exposure to a chemical stock, which are kind of
Raw
maneuvering
material
more
providers.
towards. Sorry.
They are raw material providers to the pharma space.
Correct, correct. And I mean, yes, I mean, over a period, they are likely to benefit because of this China plus one factor. Yes,
Okay.
they all are going through a good consolidation. But I think a good thing is happening for them because they initially started with huge demand. Then they realized, oh, demand is not there. They put up capacity, they borrowed, and now they are seeing China is coming back and trying to kill them. So I think last 12 months,
Sure.
last 12 to 18 months rather, they are now facing the reality of truth of life where everything can go wrong, which you would have assumed as such. But that will train them, and all the managements which come out of this quite clean could really be huge multi-baggers.
Okay.
I mean, if you were to again pick any of the stock and see 12 months, array, ye kuch nahi kiya, yeah, maybe 18, 24 months, yes, I would agree to you. But I think जो transition के through this sector is going through, big winners are likely to come out of this sector. And this I'm talking from a 3 to 5 years perspective rather than an
Sure.
immediate 12 months or 24 months. And अभी अग्नि परीक्षा हो रही है वो पूरे सेक्टर के प्रमोटर्स की एक्चुअली.
Okay.
सर अग्नि परीक्षा में तो अब बहुत सारे प्रमोटर फेल भी हो जाएंगे. कल शाम को
बिल्कुल
इंडिया और
बिल्कुल.
चाइना की दोस्ती हो गई. अब आप देखिए अब वहाँ से दोबारा डंपिंग शुरू हो जाएगी. सारे स्टील स्टॉक्स, सारे केमिकल स्टॉक्स, अब आप देखिए कैसे वहाँ पे आपको सेल्स आते हुए दिखते हैं. चलिए पोद्दार साहब, बहुत बहुत मेहरबानी आपकी. बड़ा अच्छा रहा पिछला आधा घंटा. बहुत सीखने को मिला आपसे. और जो
Even
आपने
I
7-8
enjoyed it.
स्टॉक्स 7-8 स्टॉक्स जो आपने बताया उन पर हम लोग बिल्कुल ध्यान रखें.
Right. Great. Thank you so much for being part of this, and would like to have such conversation as much time as possible. Great. Thank you so much once again, Sakshi ji and Shailendra ji. Thank you so much.
Thank you.
And sir, festive greetings to you and your customers of the small case portfolio. Here's wishing that in 2024-25, the financial year that will come now, the small case portfolio becomes the big case portfolio.
No, I mean, apart from small case, there are many other clients which we are kind of handling, which are
Okay.
HNIs, and so yes, I mean, we are kind of helping most investors out. And
Sure.
thank you so much for your wishes, and same to the team that is there at Business Today. To all of them, to their families, have a healthy, wealthy, uh, happiness fulfilled next year and many more years for this Amrit Kal that we are going to see for the next 50, 100 years for India.
Thank
Thank
you
you.
so much. Thank you. All right, viewers. So that was Mr. Poddar sharing with us his views on the markets and where exactly is he going gung-ho on even in this downturn in the markets. Let's now welcome another top market master, Sharad Avasthi, Head of Research, PCG. Smiths is now joining in on this special edition. Warm welcome to you, Mr. Avasthi. Good to have you with us. And season's greetings right ahead of Diwali now for you, for your team members and for your family members. It's so good to have you back. Tell us, has anything worried you in the last 3 weeks or so in the markets?
All of your viewers, all your team, both of you as well. I don't think I would be worried. It's hardly been a 7-8% kind of crack. But I think some people would be worried again who are looking at it, stocks that have corrected 30-35% from the peak. But most of these stocks had gone up 2 to 4x over the last 6-7 months. So for them, correcting 30-35% is not just such a big deal. Whether valuations were over the top or what they were or what they are not is another story. But I don't think you should be unnerved with this correction. 5 to 7% corrections should be taken in market balance in your normal stride. So I'm not really worried about this. I think it's very normal. And I think what has derailed my thought process is basically the interest rate trajectory. I was expecting it to be very smooth on a downslide, but suddenly speculations have come back after the rate cut that maybe you will not see a follow-up on that. I think that is one space on the macros which is a bit derailed, but I think over the next month or two we will get more clarity on that and more confirmation on the bias that most probably further rate cuts are coming down the line. And I think that's one jolt that is beyond my understanding, or which I'm not very happy with, or I had not anticipated. But otherwise, I think a 5 to 7 correction after the type of rally we have seen across the board, I don't think you should be very unnerved. I think the recent state elections that are to follow, whether from Maharashtra or from Jharkhand, if they throw up a good surprise, a positive one, I think then we could again resume a very strong rally. Q2 numbers, I think again you're not really expecting much, so the probability of numbers disappointing you big time is a very low key idea. I don't think there is a very high probability of that happening. But I think most of the growth would be bundled in the second half. Q3 could be a very promising quarter. Most of the festive season has bundled into Q3. Post monsoon activity pickup would also be there. So I'm very gung-ho about it. I think this dip gives you an excellent opportunity because from where we were, I think maybe year-end targets would be 10-15% only, calendar year-wise. But now with this 5%, 7% fall, I think now you could be looking at 20-22% kind of rallies, and that's a very decent run up if you're looking at it over a say 3 to 5 month kind of horizon. And I think even the US elections would be over. So I think most of the overhangs would be over and would be over by November end. And I think the markets would preempt a very strong rally from here on, considering the type of input we receive on Q3. And our expectation is that Q3 and Q4 might be much better than Q1 and Q2. So we are really building our positions for a strong year-end rally.
Wonderful. And I was waiting for you, Sharadji, for many, many days. I think this is the first appearance in October, and possibly with your presence on the screen, we may have seen the worst of the fall behind us. Firstly, I'll request the PCR to show the chart of Coforge. This is a stock which has come up with fantastic set of numbers. And about 3.5-4 months ago, when the counter was at about 4,200 rupees, Sharadji had mentioned that he sees it topping more than 7,000. That has happened. So thank you for such a wonderful pick. And just yesterday, the numbers came in. How do you see Coforge from now on? And what are the hopes of this combined entity with Signity Technologies?
Yeah, I think the combined entity, sir, would do pretty well going ahead also. The long-term trajectory that the management has set forth for itself is very enterprising, and Coforge has been a darling stock for quite some time. I think since the name changed, after that it's been on a stupendous run, both Persistent and Coforge basically on the year-endy side. And they've done some fantabulous business. The growth rates are much better compared to the larger peers, traditional IT companies. And I think that will continue to be the case. Coforge might do a bit better than Persistent, given the type of growth rates that they're targeting. And as I have said earlier, also that this is a multi-bagger kind of story. The quarterly numbers are largely better than expected. So I think a bit of re-rating can happen on the numbers for this year as well as next year. And as I was speaking earlier, also the second half probably would be better for India as well as on a global scale. So that should give some fillip to most IT companies' numbers. The only flip point could be that, maybe we are discounting too much on the 18-24 month kind of cycle. So maybe 18 to 24 months, it's fully to fairly priced. But I continue to believe that if you have a 4-5 year horizon, this could be something that you could still keep in your portfolio for more than 10,000, 11,000 kind of targets.
Okay, so the next one is a 5-digit target on Coforge. Let's see when that happens. But 18 months or 24 months, this looked fully priced. Sharadji, you just mentioned that you're looking at a fantastic close for 2024. And in the universe where the indices themselves have corrected about 7-8%, there are many stocks that have shaved off 30-35% from their top. Any names that you can add to the existing tally that you have given us, where you have either added to new positions or made a fresh entry?
I think two large cap names we are looking at, mid cap, small caps, there are many names, but large cap names, what we are looking at is probably a Reliance Industries and an LIC. LIC, I think I'm very bullish. The type of valuations it is trading at, even if it trades at a discount to your private sector companies, and it trades at 1.5 times EV, I think you're still looking at a target of somewhere around 1800, 1900 in a year's time. And I think the long-term trajectory is very strong for insurance, and LIC should benefit out of that. The focus on profitability also is something that is again renewed because of this issue after listing. So I think the non-par focus should yield very good results in the long term also. That should result in some re-rating for the EV multiples that they get. And if they even trade 1.5 times EV, embedded value, and you have a 15% accretion to the embedded value over the next 12 months. I think this could be something that could be trading at 1900, 1950 kind of level. So I think that's a very good story. It's a safe story in case the markets do disappoint in some sense. I would be comfortable holding LIC for the long term, so it doesn't really bother me. And the other one is Reliance. I think the type of products or the type of funneling that they have, it's like a unique position where you have a whole setup ready and you just need to funnel down the products through that ecosystem. Whether you talk about Geo, whether you talk about Geo Finance, I think the whole ecosystem is very well ready for them. The only flip side could be that execution could be something that they can falter because they're spreading into too many things. But otherwise, when I look at it, they could even come out with a challenge for something like a Blinkit with a faster 10-minute kind of delivery or a 15-minute kind of free delivery. So they could disrupt a lot of things. Beyond this, I think the type of long-term targets that they have given for this thing, Geo Telecom, as well as entertainment, as well as your renewable energy business. I think for the new energy business, they are targeting a size equal to the OTC business, which is what 50-60% of your revenues right now over the next 3-4 years. So basically, if you sum that up, if the media business, this business, and your new energy business is all roughly double over the next telecom business over the next 4-5 years, I think you are looking at what 50-60% of the business roughly doubling up. So I think, and those other two are high margin businesses compared to the traditional O2C business. So I think Reliance is an excellent story to start with. Even if you look at conservative targets, I think I'm looking at 3,300, 3,400. That's a decent upside on a large cap stock. And I think beyond that also, if the targets that they are doing, most of the investment phase is over. O2C hasn't really seen much of a capex over the last few years. Some minor capex they're doing now, which should yield results again over the next 2-3 years. So I think in the large cap space, at these valuations, I would be very happy buying a Reliance. And LIC obviously is a good medium to long term bet, and even a multi-decade kind of idea, because insurance penetration is still pretty low in the country, and I think LIC will benefit out of that.
Okay, so those are the key names that we will definitely keep an eye out on. Reliance Industries, LIC for sure, those are the two highlights. But you were talking about Blinkit and how Zomato is also disrupting with these free deliveries. Nothing comes for free. It has just today hiked the platform fee for Zomato to 10 rupees now. So on the one hand, it is making it free for the buyers. On the other hand, it is taking it away also. In the last 1 year, from the time August 2023, Zomato had introduced the platform fee for the first time. It was just 2 rupees, and within 1 year, it's gone up to double digits. That's the kind of pace that it has gone up with, because it realizes that every 1 rupee that it takes from customers as in the name of platform fee is adding 65 crore rupees to its top line per annum. So that's the kind of advantage that we are looking at for Zomato for sure. And but the sad part is that it's made us used to it. We can't get away from it also. Now we have to use it, pay the fee, and get it over with too.
Get food.
It's food. We cannot get not used to it. And now it has told us कि अच्छा रात को 2 बजे भी भूख लगेगी तो भी I am available for you. So don't worry, don't wake up your mother or anyone at home, but wake up Zomato and I will be there. Let's see how things change. But are you looking forward to the Swiggy IPO also, Mr. Avasthi? Do you think that will change things?
Yeah, might do a bit of it. I think a bit of the flows, maybe they get diversified into Swiggy. But other than that, I think the type of fascination we have around these stories in these days, I think till we consider that there will be a risk on kind of environment over the next 3 to 4 months. So I don't think there should be any problem into these ideas. Valuation is a different ball game. I think this is a tad too expensive. Most of these names are, but I think the business model for platforms is like that only. Once you get a user base that is large enough, it is like dangling into their wallets and trying to understand how much you can extract for the services you are paying. And I think they will keep doing that until they realize that they've gone beyond the point where it starts hurting their growth in terms of subscriber base. But I think in India, it's still a very nascent phase. I think tier 2 towns have a lot of scope to offer. Maybe tier 1 towns or tier 2 towns may have saturated, but there is a lot of rural population or semi-urban kind of areas where a lot of demand could come from companies like Zomato. And then obviously how you add on or pile on to additional verticals on that user base, finding out cross-selling opportunities, etc. That would be another ball game. So I think it's an interesting opportunity, but the only flip side is that maybe they're priced pretty much, pricing pretty much everything positive that they can do over the next 2-3 years. So I would not be very gung-ho about getting into it. But I would rather wait for some corrections, broader market corrections where a risk off comes into play. So might be, you get these ideas at a much better valuation than what they're trading at right now.
Right. And there is, Sakshi, another parallel in our lives as far as Zomato's platform fee is concerned. This is what Sharadji will confirm. There was a time when there was no service tax on anything in India. It started with 2 percentage points on your mobile phone bill on a monthly basis, and now we are at 18.5%. So 2 rupees was just the starting. It will go up to 50 rupees also. Wait. Sharadji, so it's LIC and it's RIL that which you are looking at keenly in terms of valuations. Now that Hyundai is listed, where do you think is a good price point to enter the stock?
See, I think even current prices are a good price point, but there are, areas that you need to look at. How they shape up in terms of the new launches over the years to come is something we are keenly watching. In terms of valuation, I think the IPO wasn't leaving much on the table. Though they have a lot of fanfare with respect to how their products have done in India over the last 2 decades. I think they've done phenomenally well. The cars have received very good response. The SUVs have received very good response. I think most means auto ancillary allocation for auto funds where auto has an allocation. Most places Hyundai would find a place. But I think the valuations are not at a discount to even Maruti. So that is something that's challenging. In case the new model launches can throw up a spanner in the wheel and, you could accelerate a bit in terms of growth rates and a bit of re-rating. I think that is something that could happen. But again, you need to understand how the launches shape up. And obviously the Kia overhang is also there. So I would think that you could gradually start nibbling in, every day. There is a bit of correction even at current prices. I think gradually you could accumulate. I don't think it's that bad. The only part is that maybe, the subscriptions weren't there too much. And obviously the K factor also does play on them, whether it's the Kia factor or the Korea factor, so both included. So I think it's been a bit of a subdued listing. There's not been much, but I think as a long-term investor, you can continue to hold. It's a pure play PV investment that you get in India. This is most probably what this is the only option other than Maruti that you have. So I think large fund inflows, etc., would come in, and in case one or two of the models do get into a bumper hit zone, there could be a lot of re-rating to the forward numbers. So we are waiting for some kind of management commentary or commentary on the uptake that we can possibly see, or some of the model launches being very successful on the EV side or on the normal passenger vehicle side. So let's see how it shapes up. But these valuations, I would not call it cheap. I would not call it head-on expensive, like out of the box. But I think it's a pure play, passenger vehicle play in India, the only other option available. So obviously it will find some takers. Had the valuations been a tad lower, I think it would have been better. But that's a call that the management has to take. So I think at these valuations, you can start gradually nibbling in on every correction. Long term, I think if the new models launches do much substantial business, this could get re-rated a bit.
Okay. And Sharadji, given the new numbers that we are getting on the macro scene, which is very tepid rural consumption, urban consumption also slumping below GDP growth, 5%, 4% on both accounts. Do you think somewhere our markets, our economy has stalled, and perhaps a little bit more than just a 50 basis point rate cut is needed to kickstart this engine?
So in terms of rate cut, I think it will be more a function of what happens internationally, particularly US. So I think if you believe that a US rate cut is coming again, I think most probably the US Indian Central Bank would also follow suit. Regarding what is happening at the domestic level, I think inflation has been a problem area for us, particularly vegetable inflation. But if you consider the fact that most of the new arrivals start happening pre-winter or just around winter, so I think as the new crop arrives on the mandis, I think there is a high possibility that vegetable-related inflation will substantially cool down over the next month or two. Regarding base cases, I think because of COVID, etc., and restarts and reshutting, there has been a lot of debasing of various numbers. So when you look at year-on-year numbers, at times it can be misleading. Last time Q2 was bundled in, had some part of the festive demand. This time, all of it is in Q3. So I think that will also show some reprimand in terms of how it plays out. So I don't think you should read too much into the slowdown, because I think demographically India is in a very sweet spot. Maybe a quarter or two or a month or two might be a bit of a lag. But beyond that, I'm hoping that the next 6 months should actually throw up very good numbers at the macro level in terms of rural, semi-urban demand, urban demand. And that is why I think most of the personal loans, etc., corporate loan books, etc., should also show very good growth. Deposit mobilization has already made a comeback. So I think most consumption-wise stories, you would see some uptick happening over the next, series of data over the next 2-3 months. So it's not very worthwhile to read too much into what is reported right now, because obviously it has a bit of lag effect and how part of statistics, how we collect it. But over the next 6 months, I think over the next 3 to 4 months, I think most of the data that comes in with respect to macro demand, etc., should be very positive.
Okay. Mr. Avasthi, could you tell us how are you looking at the mid and the small caps? We've actually seen a sharper fall in these two pockets compared to the benchmark indices. Has most of the froth been taken out already? Can one look at these two pockets with a fresh perspective, start looking at adding some of the stocks within key sectors here?
Yeah, certainly. I think it's not a story that's ended. If you want to generate an alpha out of any markets, you have to be into mid caps and small caps. But this fall has to be seen in context of what had happened earlier. The large caps had underperformed for quite some time, and the mid caps, small caps had a stellar run. So you can't really complain about them not performing now, because they had run the race much earlier than the large caps, and they run way ahead actually, and beyond their fundamentals. So I think they had a challenge in that, and valuations across the board and in some pockets obviously were very, very stretched. And with small cap, mid caps, they always have the challenge in the international markets, etc. And they have a number of areas to look at, because the organization is still shaping up. So some or the other challenge might come up for them, and they might find it very difficult. But the market, when it turns bullish, it seems to understand that nothing can go wrong. But with any business, things can go wrong, and when you give a top of the chart kind of valuation, then obviously your probability of falling face flat is also very steep. So I think that is what is playing out in most of these stocks. In many cases, we were discounting what, even 7-8 years in advance with no numbers right now, maybe not even something coming up over the next 3-4 quarters. But that kind of optimism, when a response is very strong, does play out. But I think be in pockets where you have confidence. If you are a long-term investor, be into stories where you think that the long-term trajectory is very strong and valuations are at a comfortable zone. And even if you are medium-term to 1.5-2 year kind of horizon investor, then go for stories where you are convinced that the long term is very strong. They have market leadership or something like that, and the valuations, or if the valuations are very cheap or very comparably cheap in comparison to the peers that they have. So I think that's the process you can follow. But I think now there are pockets where you can start looking at. Some of the hotel stocks we looked at is Park Hotels and Sami Hotels, both of which look valuation wise attractive. Sami has a unique proposition where they have been acquiring hotels and growing the business at a very rapid clip. And I think the numbers to come forward should also show up. So there is a probability that can get a bit re-rated. Uh, Similarly, you could look at something like a Mufti or a Credo Brands, basically. So again, I think there a lot of growth can come in. Monte Carlo has gone up a bit, but I still think it's a good story to bet on the type of diversification they are doing. Once it starts to pay off, maybe it will shrug off the tag of being a winter wear company. And there are many other ideas you can look at. We have discussed Sheila Foams earlier. Recently, we were looking at Fed Finance, Fed Financial Services, the federal bank subsidiary. I think they're also, as the numbers start coming up, they are working on their NPA issues. There has been a bit of growth there over the last, 6, 7 months, 2, 3 quarters. So they are trying to curve that back in. Growth rates would remain strong. Last 4 years, they've grown at a very rapid clip. So Fed Funds, if it trades even at 1.8, 1.9 times book value, I think the fair value should be somewhere around 140, 150. So these are some ideas that you can look at. I think these are good long-term ideas. Bandhan has corrected a lot. Fusion I've spoken about in the past. Spandana Spurti is another microfinance. I think that's a good story to play out over the next 2, 3 quarters as the improvement happens. So I think there are a number of stories. You look at them, you take an individualistic call. Among the large caps, I think IndusInd Bank is available at a decent valuation now. But most of the recommendations seem to be bundled around the insurance and BFSI space. But I think that is the space where negative news gets discounted too much into the price, and once the improvement starts rolling in, you could see a very sharp recovery there.
Right. Sharaji, as always, it feels that even 5 hours with you will be less time to understand your stock picking abilities and the wonderful ideas that you come up with. Thank you so much for your time. And festive greetings to everybody at Smith's, all your clients, and of course, everyone at home.
Thank you.
With that, ladies and gentlemen, we'll try and draw the markets to a close. T-1 for the Nifty, 42 points lower. For the Nifty Bank on its weekly expiry, it's a flat close, but the star of the day is the Nifty IT index, 980 points higher, 42,214. This is the only index actually which is still at the 50-day exponential moving average. Everybody, including the mid cap, small cap, and many other sectoral indices, are now below their 100-day moving average. A very strong show by Coforge and Persistent after markets closed in terms of second quarter earnings that boosted prices, and then came the earnings for Bajaj Finance, and of course topping it all was Zomato. So apart from all these, if you look at the Nifty and the Bank Nifty, you would be morose, but if you look at some other indices, you will feel happy. Let's hope, ladies and gentlemen, that the worst in terms of the sell-off on the Nifty is over. Tomorrow being the weekly expiry of the index, we will see some bout of short covering, and with that we'll call it a day.
All right, we'll wrap it up at that. 40 points lower on the Nifty, 24,430.